Hi everyone, welcome to my channel where I talk generally about legal issues you can encounter in your everyday life and insider tips on how to deal with them. My name is Alexandra and I'm a lawyer practicing in Sydney, Australia. This is one of a series of videos I'll be presenting on the topic of buying a property from the perspective of the purchaser, setting out small-ish chunks of the legal process involved, which is also known as conveyancing. Today, I'm going to be talking about issues to consider when getting your deposit ready and organising finance before entering into a contract to purchase property in New South Wales. The first point to note is that this video series deals with residential property only, such as a house, unit or block of land, and not with any type of commercial property. As always, please hit subscribe if you like this type of content and give a thumbs up if you find the information useful. A quick disclaimer that my videos are general and informational in nature only. They're not intended as legal advice, nor should you rely upon them as such. Please see the full disclaimer in the description box below. Now, that said, let's dive right in. Do you have a deposit ready? Considering the average house price in Sydney at the time of recording this video is around $1.1 million and a median of $1.3 million, merely saving enough for a deposit is no small feat. Usually, you'll need to hand over or transfer a deposit of 10% of the purchase price at the time you sign the contract to buy the property. It's normally held by the real estate agent, or more rarely by the seller, who's known as the vendor's solicitor, as a deposit holder for safekeeping and may be invested to earn interest in the time between you entering into the contract and the purchase being finalised, which is called completion or settlement. There are exceptions to this, of course, but that is a topic for an upcoming video. Another thing to bear in mind is that if you are obtaining external finance to purchase the property, most Australians would require a home loan to finance the purchase, usually from a bank or similar financial institution, is that your lender will normally require you to have at least 10% of the purchase price ready for a deposit before they'll lend you the rest of the money. Depending on your lender, sometimes they may even require 20% in order to approve your loan if you don't have any other suitable collateral and you don't want to spend extra money on mortgage insurance. Oftentimes, if you only have a 10% deposit saved and no other collateral to offer the lender to secure your loan against, they will require you to take out mortgage insurance, which can add thousands of dollars to your overall spend. This is not to be confused with mortgage protection insurance. Lender's mortgage insurance is designed to protect the lender, not you. Ultimately, the bigger the deposit, the better. Which brings me to bonds and bank guarantees. In the conveyancing process, a condition of entering into the contract to buy the property is the payment of the 10% of the purchase price as a deposit at the stage of the process known as exchange of contracts. I'll have a video explaining exactly what exchange of contracts is and what's involved in more detail, so please check that out if you're interested. For now, I'll simply refer to it as exchange in this video. In some cases, instead of expecting you to have the 10% deposit ready to hand over, the lender may sell you a deposit bond or bank guarantee to pay the 10% deposit on exchange, or an auction bond if you need to bid at an auction. This will depend on your circumstances at the time and the lender's policies. Deposit or auction bonds and bank guarantees are certificates that can be used instead of a monetary deposit at the time of exchange. They act as a guarantee of the deposit payment. At settlement, you'll be required to pay the full purchase price instead of the full purchase price less the 10% deposit you've already paid, which is the usual practice. Be aware though that it is up to the seller, who's known as the vendor, whether or not they'll accept a bond or bank guarantee from you, or if they require you to come up with a cash deposit. Organising your finance. Do you need a home loan to finance your property purchase? If you do need a home loan, it is always best to get your loan approval in writing from your lender before you start looking for a property. One thing to remember though is that the written loan approval is usually conditional on your lender's valuation of the property you would like to buy, and your lender may also impose other conditions that you'll need to satisfy for the loan to be approved. Bank valuations are used to determine the loan-to-value ratio, or LVR, in a home loan application and will impact the amount that a bank is willing to lend to you. Although it's not a legal requirement for you to have written loan approval before you purchase a property, if you do enter into a contract to purchase a property but then can't proceed with the purchase because you actually can't get enough finance, you will probably be considered in breach of the contract. The consequences of this may be that you lose the deposit you paid to the vendor when you entered into the contract, which is called exchanging contracts, and you may possibly even be sued for damages, depending on the circumstances. Examples of this happening are when the bank's valuation of the property ends up being less than the price that you've agreed to pay for it. This may lead to a lender declining to fund the loan for the full amount that you need to proceed with the purchase, leaving you with a shortfall. Other circumstances are if your home loan application is denied for other factors, such as the inability to service a loan of that amount, or if you lose your job before settlement. So get your loan approval in writing first and make sure you don't sign a contract to purchase a property until you're sure that your lender will lend you the amount of finance that you need. Remember to also budget for stamp duty or transfer duty, which is a tax you will need to pay on top of the purchase price and varies depending on the purchase price of the property, or any GST if applicable. Look out for my upcoming video on transfer duty if you'd like more information on this topic. Holding deposits. Another point to note on deposits involves what's known as a holding deposit, or expression of interest payment. In private treaty sales, the real estate agent may sometimes ask you to pay a holding deposit to secure the property, so the vendor does not sell it to anyone else. However, a holding deposit does not secure the property for you. The purpose of a holding deposit is simply to show the vendor that you are serious about buying the property, but it doesn't mean you have entered into a contract with them. At the end of the day, a holding deposit will be returned to you if you don't proceed to enter into the contract, or if the vendor simply decides to sell the property to anyone else. The crucial thing to remember is that you must enter into a written contract, that is, exchange contracts, to secure and buy the property. And in this case, you can't do that with handshakes, verbal promises, or paying holding deposits. Government assistance. Keep in mind that if you are buying a property for the first time, you may be eligible for some form of government assistance under a first homeowners type scheme or grant, or concessions on stamp duty, etc., if there are any available at the time. So remember to look into this option yourself, or bring this to the attention of your lawyer when you engage them. One last point is that if you're in the situation where you are both buying a new property and selling an existing property, please check out my video specifically on this topic, as there are other issues to consider. So I'll wrap it up here. Remember to please subscribe and hit the like button if you like this video. Please share it if you know anyone who is thinking of buying their dream home in New South Wales and doesn't know where to begin. If you'd like to make an appointment to engage my services, please follow the link in the description box to contact me. And if you have any topics you'd like me to address in future videos, please leave a comment in the comments section, as I'd love to hear from you. I hope you found this video helpful, and thank you for watching.